What you do now, keep those bids out there, capitulate it. Now, just only have a few contracts down there because you have to hold them overnight, so you got to know what your count's worth now. Got to follow the rules. Okay, we're going to be capitulating, getting it live just in case they do it. It's 597.60. When you capitulate, if they do, how do they do it electronically and high frequency? I'd love to tell you, and that's why I'm here, so I can help. And the way that they do it is they start it like this, right here, and we're short. And the thing about it is that when they capitulate, what happens in the electronic tape here in the bid and ask is that all of that high frequency volume prints that you see here lining in the electronic bid side and electronic ask side, and what you would be looking for, that disappears, and then bam, down goes the price. That's what a mini capitulation, to steal the money out of the calls and take them down. They're down 9.73, and I talked about being short these calls. It came quicker than we thought. Today, that is. And so the puts got marked up across the board. Why? Because the weekly 20-week moving average and 10-week moving average has had this wonderful selling period. Every single time we go up and shoot up there in volatility, we come right back down. And like, this is 2 days of the week right here, right now. It's 12:27 p.m. It's 5:22. It's 2012. Yeah, it is. Not only that, that 10-week and 20-week have been mathematically declining, which is also part of what? Part of the SMF system, market maker system. We have it programmed, and when we're looking for capitulation and price, we are looking for a 0 IR here, and that this would race to minus over 2 delta. And we have seen things like that happen in high beta stocks. The other one and this is the week right here. See, when it closes 4 weeks below the 10 week, and the 10 week is declining, it qualifies as moving from a bull side trend to a bear side trend because it's below them. And it's for 4 consecutive weeks. And each time that we come up here and hit those weekly moving averages, we did that trade right up here at the top. Have the 640 puts. Have the proof too. If you don't want to believe it, come find out. We got it right up here at the top of that wick. Not only that, this over here, it's sold off every time. And sometimes we hit that 20 week over here. But look at this big, powerful weekly downside bar through that 10 and 20 when it started way over here. Right here. Now, look, every time, bam. So, as we return to the volatility part of it, is we're looking where this price right here would break these lows in our system, will tell us. And what we're looking for mathematically is that we break the lows in our system, that this 1 delta right here has to immediately race to negative 1.50 ratio. And it has to break that ratio as it's trying. You can see 1.02, 1.05, that supports that short trade, but you have to break that intraday trend ratio low. That's where the selling occurs. Right now, it's kind of like sitting right on it. Now remember, that 16.33 teenies, it fluctuates. It's 98 cents a teeny. Each line, it's 100% accurate as far as where prices are made. In that respect, what do I mean? Buyers, sellers, and high frequency machines. So we're going to get weaker here, and you can clearly see it. And like I've said, the sell down has to break that low by 5 teenies. So that's almost $5. It's like $4. I don't know, do the math. So 2, 4, 6, 8. What is that? So yeah, 50 pennies. So it's like, so you have to figure it out. That's that reversal, 5 teenies. You have to break swing lows in 5 teenies, and a teeny line is 98 cents right now live with the MMTs. And you got a 4, you got a 3. You need to go on 0 here and stay on 0 for about 6 minutes. Take this right here, break that clean, and then really increase this these negative teenies here, right here. Right now, 12:31, 29 minutes to the closing bell. This is Google's weakness, that we have taken our new MMTs down. But what we're looking for is, how do we break these lows using our system, 5 teenies times 98 pennies, and go straight down and take these call options right down to just take all the premium, out, and we're there to buy them. That's what they did Friday on the puts. They took all the premium out and then just bounced them. Well, so now it's time to do it to this side of the market. So it's been holding up. They're down 970 now. And you got a little bid pop here and a little IR here and a little, you're slightly below the delta mark. So what we're going to look for tomorrow, if we don't get it in the last part of the closing bell, then we will look for it tomorrow. And we would like to see that when they're going to put their lows in, that they gap down $10 or $12, because that's where we like to buy them. This is the update. This is the put side of the market. Right here. 790 on a 615 up. 600 put. Well, that's a 616. That's not a weekly. But it's up. It's got a ratio. That's if you do break that 600. Well, you're in play for it. It's not a weekly. It's a June contract. So basically, these can go back up. These can go higher in value. Yes, I can. And we'd look to get another $5 above it. Here is another one. That price line 650 call that we traded for all them big gains was 31.49 on a high. Look at it now. So don't come off of the price line. And here is the price line's lows. Got up to 679. It's got a $22 range. Call price action. What? Volatility. New low on Google, but it hasn't capitulated, and I'm updating my price line trade right now into the closing bell live. Here and now. 5/22, 2012, 12:34. How do I trade the closing bell? Most importantly, how do I square the market correctly? The 650 call that we traded off the lows, you can see the haircut that they got, and if you didn't sell up the high, too bad for you. And the thing of it is, market makers here, we bought the calls big time. We rode this yesterday. We had all the live videos, but it was time for that trend and that price reversal volatility to come into play. And that's the part that the public has a problem with. Not by choice, but by high frequency. So if they're going to capitulate these lows here, and we still have time, and I'm going to put it on pause now, MMT, because, you know, at least we show it when we're short, and we show it when we know it, and we show it before the fact, and we show it why it's got to go down. And we're looking at that zero. It's thromboning on it now, MMT, and it's live. And you got, yes, you did. Oh, my goodness, are you going to break it? But you got to break it. You got to break that low with 5 teenies, because you get all that money on that downside. Look at that. You got to get to zero here now, MMT, and you got to capitulate it. Got to get up above that 1 1/4 delta negative. Got to get north of. You got to go. You got to break. Oh, he just broke that 1.09. There was another one. Look at that one. And this is all live right here, right now. Look at that bid ask up here, 597.27. But he's got to break it. But he's got to break it. When he breaks it, it's got to be 5 teenies times 98 pennies. Here we are right now. Look at here, Karine. You're right. Look at that downside move. It's everything we're saying. All right, it's 15 minutes to the close. Well, I got about 15 and a half, actually. So, yeah, you want to capitulate the lows now. Capitulate it, support the short. And guess what? Look at that ratio here. Again, you're at 1.15, and you want to get north of 1.50 now. 1.50 ratio. That would really get it down. And I said you had to break it. Here, let me draw that teeny line. He just did a small bid pop. Yes, he did. Take a look. Look at that double diamond right here. That's off of that bottom. So he hit it there, and that was a short squeeze. You still have, now I have exactly 15 minutes to the close with the double diamond. But remember, all day long, the double diamond reversals that go up in three teenies. So you go 1, 2, 3, but you kept making lower lows all day because you finally got to that ratio low of 1.15. And you're 15 minutes into the closing bell. And we identified it right here on this very live video with MMTs. Yes, we did about how to break that and get down there now. But we didn't capitulate it. Capitulation would mean that the bid would have disappeared, the price would have dropped very rapidly, and you would have been a big owner at the bottom. Did not do it yet, but we still have 14 minutes left. Here we go, MMT. MMT, we're making another. Look at that, 222 lows, 7 highs. Didn't I tell you from yesterday that you would have more lows than you had yesterday's intraday highs? And it was like 225, I think. So far, yeah, well, we better make more lows. Otherwise, I didn't do my job. I'm missing it by 3. Within the... Okay, excuse me, I'm live just for one moment. Thank you. I can see the apple right here, but most importantly, this is that Google breakdown. So, yes, we sold these at the high of the day, and they'll be posted. That Rick Gully sold the calls at the high of the day on the opening part of the price volatility on the first print, which was the right thing to do. And he got to keep his profits. No joke. We'll do a live interview with him after the market on his successful trade and why it's powerful to know when to sell. Now, let's get back to the capitulation. In high frequency, what we're looking for is how that electronic bid would disappear. And what would end up happening is then prints would go below the market, and that would be way down here. Okay? And you cross up here now. But you sell down, they disappear, and people chase it down. Stop market orders would get triggered at that low point. And right now we have 10 minutes to the closing bell. But we have made 222 lows, 7 highs. The 620 put that they took all that premium out, they finally gave it some premium to its original price. Of course, it's a weekly at 24.30 on the highs. Over here, 615, same thing. This side got marked up, as it should, in price volatility. This side over here, the 600 call, is getting marked down in volatility, as it should. They don't go one way, like they were doing with the name, because they don't. They have to give this side of the print. Once this side starts, you get more of a balanced print on both sides of the market, of course. But when you're looking for capitulation, this side, all of these prints go away very quickly, and it's called like a little flash trade. And they go down, MMT. So we're still holding steady. So far, we got 9 minutes to that closing bell. The short's working with the $17.71 range. How about that? What did Mario always say? In this particular name of late, you got to break 1770 ranges to capitulate below the lows here. And we'll update the last minute of this trade into the closing bell live. And the put contracts, they're up at their highs. And these calls, they've been, during that whole reversal of lows, they've been holding this premium steady over here, which means that they're giving it premium to sell this market before they go much lower. And that way, that supply and demand, whatever it may be, they can go ahead and go through those transactions before those transactions do what? Go lower, as they have done. Remember, that's a $600 call. I'm going to be a king buyer. Why do I say that? Because I'm a market maker, and they close at $17. I'm going to buy them cheap. They're holding this bid to sell that market. And my print, I want to get in this. I'd like to start looking at them at around 270. Yeah, right now. Closing bell had a see that 1, 2, 3, 4 teeny breakout on Google right here. 596 was a low. We're closing it out. 222 lows, 7 highs. There's that special diamond alert right here. And here's the chart. There it is. Price volatility has increased on both sides of the market, and everything's in play.